we could be anywhere.
I'm going to focus on the HTT. I will start with a brief presentation. We've been talking about it. Here it is, it's being approved, sum up. It's a great story. And then we will discuss, as part of the panel, whether this HTT is fit for purpose and what is next in terms of transparency. Before we do that, I will let my panelists introduce themselves, starting with Ad.
I'm Visser. I'm head of section of the financial market and collateral section, so my background is more the covered bonds from the collateral side, so not so much from the regulatory side. Thank you.
Good afternoon, Massimiliano Rimarchi, policy expert at the EBA in the small team that works on securitization and covered bonds.
Good afternoon, my name is Sascha Kullig. I'm head of capital markets at the VDP, which represents the German Pfandbrief banks.
Hello, I'm Ralf Grossmann, head of covered bond origination at Société Générale, and I'm the chairman of the technical issue working group.
Good morning, I'm François from Banque de France. I'm Deputy General Manager for Operations, which means monetary policy and investment policy.
My name is Andreas Denger, working as a portfolio manager for Merrill in Munich, and today I'm here in my role as the chairman of the Covered Bond Investor Council.
I'm Guy Combot, I'm credit analyst on financial institution in the first insurance life company in France, CNP Assurance.
Thank you. So I mean, quickly on the HTT, I'm not going to go line by line because you would be bored to death. But I think I want to make you understand what is the logic. And the key challenge of the HTT was indeed to allow for comparability, so better comparability, more efficient. But as well, I mean, the reason why we had an active dialogue throughout the project is that you do have national differences which matter, and we needed to be able to reflect them. The HTT, so you will have one per program. The aim is to have a reporting on a quarterly basis, at least. And then it will stay on the issuer website as the entity are today. So we are not talking about a common platform, and that's very important for legal purposes. So here on the screen you have the introduction tab, and here you can see that you have three types of tabs. You have A, where we have put some general information on the program. Then you have the tab Bs, so B1, B2, B3, where you have more detail on the different asset classes. So if you have a mixed program, you might have tab B1 for mortgages and B2 for public sector assets. But if you have only mortgages in your pool, then you have only one tab B. And then we added shipping as well because it's part of CRR. And then tab C is where you have more qualitative information, so this is the harmonized glossary. And in blue you have tab B, where we allow the issuers to put either their current entity, if they believe that it goes still beyond what we have achieved with the HTT, or if they want to put more information which is relevant for them and for their covered bond program. So moving to the tab A, to the general information, so to give you a bit of the idea of how it works. So when you have for completion, these are the fields that we want which are mandatory. So issuers will have to put either some data, either they can put a coding ND1, ND2, or ND3. The idea of the coding is to say whether you have no data. First reason, because it is not applicable to your legislation. ND2 is because actually it's not relevant for you and for your covered bond program. Or ND3 simply because you don't have the data right now. So we want to give some reason why you don't have any data, which we believe is important. And actually this is one of the features which you have today in the ABS platform. Then you can see as well some field numbers on the left-hand side in column A, and they were introduced to help VLOOKUP. So then you can do peer-group analysis very quickly. If we move to section 2, where you have a regulatory summary, so this is where we want to help investors to understand whether the program, what is the LCR status of the program, whether the program is UCITS compliance or not. And at the bottom of that tab, we have the list of fields required by CRR, and then you can spot very quickly, thanks to a link, where you can find the item. So if, for example, if you go to line 287, then if you click on the link, it will put you directly to the mortgage asset tab and to the right line so that you can find the information. If we go back to the Générale tab, so I mean, again, we wanted to be able to put national differences. In some countries, you do report, so if we go to section 3, Paloma, so yeah, so here in section 3, the first lines you can see in general information, you have the cover pool size and the outstanding amount of covered bonds. In some countries, you have to report it on an NPV basis, but it is not the case for all countries. So here what we decided is to have a system where you have some hidden lines. So for the countries where you have this reporting, they can have it as an addition, but it is not compulsory across issuers because it is not relevant for all issuers. If you look at the, we have some disclosure by maturity, and here you can see that you have contractual and expected, and with this, we don't have a section where we say whether the program is a hard bullet, soft bullet, or conditional pass-through, but by having the contractual and expected maturities, then investors will be able to find out, and then we do have some referencing in the glossary, and this is key in light of the current market development. Another key item in light of the market development is regarding over-collateralization, which is just above the maturity. So if you go back up a little bit, when we talk about OC, we are going to say when it is legal, when it is actual, what is minimum committed, and what is the reason of that minimum commitment. Is it for rating purposes, or is that for other purposes? If you go at the bottom of that tab in section 6, this is where we have some extra space so that issuers can put more information as they wish. So for example, if they have an NPV test, they can say whether they fail or pass. If they want to put more information on cash managers, account bank, etc., this is possible here. So this is part of the flexible area. Now, moving to one of the tab B, I'm not going to show all of them. I mean, the logic is exactly the same, but obviously with the relevant items for each of the asset classes. So taking the mortgages as an example, you can see that from the start, so from line 12, you will be able to find out how much residential and how much commercial you have in the cover pool. And then we have general information for residential loans, commercial loans, and for the total pool. So you can see in column C, D, and F. So very quickly you have a good overview of the breakdown of the pool. And then when we move to section 7A, where we have specific information on residential mortgages, then I'll just take the example of the LTVs. So if you go a bit down, Paloma, please. So you can see for the LTV, so we are going to show the unindexed and indexed, which is important. And you can see as well that we have the breakdown by bucket on a nominal basis, but as well with the number of loans. And this is where we are showing some granularity information on the cover pool, so no loan-by-loan data, because it is not a requirement of the industry, but we do show some granularity information. And again, you have this system where you have the hidden line. So for example, in some countries, some issuers give more detailed information on the LTVs when they are above 100%, and this is still possible thanks to these extra lines. And last but not least, we have the tab C, where you have the common glossary. So here you have a number of items which were decided by the task force and the issuers, which matters. So we're going to give more information on OC calculation, LTVs, definition, property valuation, hedging strategy, etc. And again, if you go to the hidden line, for countries where you do have some NPV calculation, they will be able to disclose their assumptions if they wish. So again, some degree of flexibility. And the blue tab is where you can have entities put as such. I mean, the idea as well is to ease the implementation. Issuers can copy and paste their entity if they provide enough information, and then you can link it back to the HTT. Or otherwise, they can put whatever data they believe is important. So this is more or less that's the HTT in a nutshell. So I mean, on this basis, maybe starting with Andreas. I mean, since 2012, you've been quite vocal about having such a template. You had some suggestions. You did mention throughout the process of the task force that the devil was in the details. So I mean, would you say that the HTT is fit for purpose? Are the details good enough?
Well, yes, you mentioned that the Covered Bond Investor Council was pushing quite hard for better transparency for covered bonds, and we came out with a transparency template, I think 4 or 5 years ago. And if I now look at the harmonized transparency template, I think it is quite close as in comparison to our transparency template. So I think it is a very good way of having coming to a result among the covered bond countries to have a high degree on transparency. So, meaning, I think we can be very, or we appreciate it very much to have this harmonized template. And of course, now it's the hope that people will use it. Hopefully, also issuers who are not part of the label yet, so this template will become the benchmark in terms of transparency.
Okay. Does it mean that you are dropping your template?
Well, I mean, what means dropping? It is always a question of the level which can be agreed on a among all countries, among all issuers. We mentioned several times that there are, of course, numbers which would be interesting to see and to hear. Not talking about loan-by-loan data, but others. But I mean, you have place in your template that issuers can add further data. But I think, and we heard it, you need to find a good compromise where the whole industry is, let's say, behind this, and that, okay, this is a good solution and it really helps. And I think that is the this template.
I mean, Guy, as an active investor as well in the covered bond, as well as in securitization, actually. I mean, what is your view on the HTT? What are the pluses and minuses?
Well, really good news for us because, as you mentioned, when you compare with securitization, sometimes covered bond is a little bit poor. We have less information on the pool. So for investors like us, we are buy and hold. It's really important to imagine what could happen if the bank goes in bankruptcy and if it only remains the pool. So we are used to look at the pool, and practically most of the time it's quite difficult to have a broad view of all the pool in various countries and so on. So it's really good news for us to have this. It's really useful, and the tool seems really easy to use. I imagine for the issuer it's a little bit more difficult, but for us it's really useful, yes. Well, what is missing? Well, first of all, what there is in the template which is really useful for us, for example, just a glance, you have the three OC overcollocalization, so a breakdown of LTV and so on. So that's simple things that when you have to decide in short terms to buy or sell something, it's really useful. The frequency on a quarterly basis, at least, if I understand, it's really interesting too. And the way that issuer can disclose if they don't fill in all the fields, it's another really good thing. Maybe we have some qualitative information in this. Well, so what is missing? Maybe a unique website would be easier for us. I heard that some investors are complaining because maybe when you have a program restructuring, you need some information, for example, that it would be useful to add in second version maybe of this tool. But no, I'm really convinced that it's a useful one. Maybe add a conditional pass-through flag if there is, because I imagine in the future it could be developed on a large scale. So, well, really important for us, really good news.
I mean, Luca did mention that it can be confusing to assess the regulatory compliance of some of the covered bond program. Do you believe that the HTT in that sense is ticking a box? Is that going to be a piece of cake now, or you can still see some challenges in terms of...
I mean, I wouldn't rule out that there won't be any challenges. I guess I don't know how regulation will develop, but I mean, Luca mentioned it. At least you now have a database where you can look up if a bond is, for example, LCR compliant or not. So you get good information, and as an investor, the need for documentation and doing kind of due diligence is rising quite dramatically, and therefore it is, in our terms, for internal regulation, of course, important to have such a tool. When it comes to EU regulation, of course, it is in parts helpful, but I don't know what will be add-on in this EU regulation. But I think you've got fields where you can add additional information. So I think this template has the capacity to develop itself if needed. So.
Okay, thank you. I mean, moving to you, Ad, I mean, you invest in the product as well. The industry was asked to look for a compromise. Is the HTT the right compromise? So if you can give us your view, and as well how you use data as part of your due diligence for covered bond and other assets. Thanks.
Thank you. So at the ECB, we use the data and the template as one of the several sources of information on covered bonds. Of course, the number of covered bonds that is eligible in our collateral framework is much higher than the ones that are under the label. So we also have to go elsewhere for information, especially, of course, for those bonds that are not in the label. I think it's progress that is made, and it's of course good that transparency increases, and also that there is more harmonization. One of the discussions that we continuously have and will continue to have within the Euro system is on what levels of information we need on the various assets that also are eligible as collateral. And development that we have also seen in the last couple of years is that compared to a few years ago, we had traditional covered bonds and you had ABS. And over the last few years, we have seen that all kind of products that are a bit in between. So in the covered bonds, we now have the soft bullets, we have the conditional pass-throughs. We have these new instruments that will become eligible next month, these non-marketable debt instruments backed by eligible credit claims, which is also a bit an in-between instrument. This afternoon we have this European secured notes on the agenda. So there are a lot of instruments which are a bit on this continuum, and that also triggers within the Euro system and debate and thinking about what kind of transparency and what kind of information do we need for these various instruments. So for the ABSs at the moment, we have much more stricter rules than for many other products. And it's an evolving process, and that will continue. And in that whole process, thinking about it, what is needed and what makes sense, the covered bond label is definitely an important input. Thank you.
Thanks. I mean, François, do you share ads comments, or do you operate differently at Banque de France? You have a...
Well, no, by definition, we don't operate differently for monetary policy. We are in a continuum in that case. Having said that, I mean, as Ad said, there is this continuum of product, and the question is open regarding the appropriate level of transparency for all of them. Obviously, covered bonds are not ABSs, so one cannot replicate what is being done on the one side, on the other side. But still, there is an open issue on the right level of transparency for central bank in the context of monetary policy, but also for central banks as investors. And from that point of view, I mean, at Banque de France, we have been. I'm switching. I'm talking as an investor now, not as monetary policy on my monetary policy side, but as an investor, we have been active in the covered bond field for years, and even more now with the CBPP. And clearly, this kind of template is very useful. That's going to be very useful for the people in our staff who conduct the analysis of the covered bond, for our risk management staff also. This is clearly an improvement. But to me, this is not the end of the game. This is the starting point. This template, to me, is an opportunity for a better in-depth dialogue between investors and issuers. There are a number of information. Of course, the more information you have, the more questions this triggers, and this is a good opportunity to ask more questions to issuers, and we will definitely. That's the way we will use this template. But again, it's a starting point also because the market will keep on evolving, regulation will keep on evolving, so one can expect the template to keep on evolving also. And be more fed with more information, but that should be, in my view, primarily the result of an ongoing dialogue between issuers and investors. One should not wait for regulation to change or to impose anything. The bottom-up approach between investors and issuers, in my view, is the best way to get the right information to the right person. So I strongly encourage both sides to keep on discussing on this topic, to keep on improving this template. It's a great tool for due diligence. It's not a substitute for due diligence, clearly.
But two questions on this. I mean, one is when you talk about the continuum, when we surveyed investors as part of the project, I mean, clearly there was very, very little appetite for loan by loan. But I mean, from your point of view, if I hear well, is that the more the covered bond product borrows feature of securitization, is that maybe where the more you might have to have similar kind of information, or it's even as it is today? Because, I mean, the conditional pass-through started, and we might see more, and clearly that's a feature of securitization. So does it depend on the development of the product, or it's even today, this is some kind of, you need it in your due diligence? And second is, I understand that you did as well a survey, and it would be interesting if you can share what were the findings.
Yes, well, starting with the second question, we did, I mean, a survey, yes. We discussed and we asked a question to our counterparties on the covered bond market, on what they would need what kind of information they would need in addition to what they had already. And we find basically so it was, I mean, it was conducted with a small number of counterparties, so it's more anecdotal evidence than a scientific survey, obviously. But a large number of the questions that were raised are basically answered or start to be answered with this new template. There were a number of questions regarding the eligibility in terms of LCR, in terms of CBPP, whether it's eligible or not to CBPP. There were a number of questions related to NPVs and this kind of stuff. On this point, I think, I mean, having information on NPV is nice, but what is even better would be to have information on the methodology. Otherwise, it's a bit frustrating. So I understand that there is a glossary, which is also something that the people we surveyed were very much looking forward to. I think this will be one of the areas which will be very key to investors to really understand what is in the template and what is being put by issuers. On your first question, the level of transparency and whether or not we should move toward loan-by-loan approach, I don't know. I don't think that the main point, I think, is that we are going toward more transparency and more transparency with regard to the composition of the pools. Does it mean that for covered bonds, we have to go toward something similar to what has been done for ABSs? I don't know. I'm not sure. To some extent, this is a kind of information which is difficult to handle in the sense that providing information on hundreds of thousands of individual loans might not be very usable by a lot of investors. So does it make sense to go that far? I don't know. I'm not sure. But there is certainly more granularity to be looked for than what we have today. And I think there is a general trend in that direction. Whether we go up to the loan-by-loan approach, I don't know. This is to be discussed, but there is clearly a logistical question associated with that. We have this survey, this loan-by-loan portal for ABSs. And in the context of the Eurosystem, we did some, we discussed, of course, with investors and market participants to see whether they used it or not. And one of the remarks we had was that too much information, if it's not provided in a very, very friendly form, is difficult to use. So, and the same goes even more for covered bonds, I think.
Thank you. I mean, moving to you, Massimiliano, you had some recommendation last year. So, I mean, in light of all the work you did, is the HTT in line, or you would have done it differently through technical standards?
Yes, so I have to say this is a substantial and major improvement. When we wrote our recommendation on transparency, we did a similar exercise, if I can say. We looked at the Covered Bond Investor Council template as a proxy of what investors were asking for, even though also that template was probably the result of a compromise to some extent. And then we looked at that time, 14 national transparency templates. And it was clear that the national transparency templates, so the issuer side, was not always replying to the investor needs and to the investor requests on one side. So I remember, and I re-looked at my notes, it was clear that there were many, many aspects missing in several national templates. At the same time, it was also clear that these national templates were not clearly fulfilling the even probably, yes, unclear or high-level requirements of CRR 1297, paragraph 7. So indications on maturities, structure of assets and liabilities were missing from some issuers' templates, currency composition was missing, there were several items. The definition of the indication of 90 days past due was not present in each and every template. So if I look at your template today, not only I'm happy of the fact that it's called now harmonized transparency template, it is an harmonized one, and it has broadly solved those discrepancies that we had identified at that time. So I think it fulfills, broadly speaking, obviously, it's always a matter of discussing the details, but it fulfills, broadly speaking, the need for a comprehensive risk analysis by the investor. And it is harmonized, so I think he raised the bar in that respect. So it is obvious, it is no doubt a major improvement in this respect.
Can we hope for a special status for the covered bond label following this HTT, or you see the covered bond label and all the work which has been done in the past year from a different angle?
Yes, so this is always a difficult question to which obviously I don't have an answer, but if I look at now in these days we are working, I mean our team is working a lot on securitization obviously, and if I look at the discussion now, in securitization it is clear that we used heavily the experience of the loan-by-loan templates initially developed by the ECB and the European Data Warehouse, and that became a benchmark even for regulators, even for ESMA when drafting new templates. So first of all, if I can say something is, instead of waiting for the regulator to impose more or less inaccurate transparency requirements, it is a major improvement to have today a product of the covered bond of the ECBC that gives us a major benchmark to probably, if needed, define a template. So that's the main news that I see today. If you follow the discussion on can the label have a regulatory recognition, you should follow the discussion today on what's happening in securitization. Our view in our advice was that still the obligations of disclosing and doing due diligence should remain with respectively originators and investors. The same probably should apply to cover bonds. We don't see a private entity to stamp and certify by the rule compliance of a given product with a regulation. But it's not excluded that there could be increased roles, like a unique website where originators are obliged to disclose, as it happens as it probably will happen with the European Data Warehouse. So I can certainly see the usefulness of the label or the website run by the label or similar to basically facilitate the market functioning and also compliance assessments. I'm not sure whether the label will be a one-to-one substitute for compliance assessment. So I'm not sure whether one day the regulation will say a compliant cover bond is a compliant that receives the label, so to say. So this I cannot say, and the current discussion in securitization does not exactly go in that direction. So it's an example to look at.
Thank you. I mean, now moving more to the issuer side. I mean, Sascha, in Germany, you have a specific legal reporting requirement. You had an HTT entity. Now you have an HTT. I mean, how is the HTT going to fit over there? And is that a supplement? Is that?
Well, of course, there's a huge overlap of content, which is no surprise because we were involved in the whole process right from the beginning, and we very much support this HTT, not only in light of what Massimiliano just said. We can't wait until the regulatories come up with a maybe wrong idea. At the same time, there are differences between the HTT and our template, and you probably know, and you mentioned it, there's a legal requirement for Pfandbrief banks to disclose on a quarterly basis quite detailed information. And this legal requirement won't disappear. And therefore, this HTT can be a supplement only and not a replacement, of course. There are some differences, as I've said, so it's quite difficult for Pfandbrief banks to comply with both. You might now say, okay, there are only 2 German banks having the label. That's true, but nevertheless, as we support this initiative very much, we try to convince as many VDP members as possible to disclose those figures. Of course, this means that we will have to add some information on our template, on the legal requirement, Article 28 of the German Pfandbrief Act. The problem is that the structure of this template and this requirement is totally different to the HTT. So what we will do is, first of all, we already work very hard on it. We will try to identify the missing data or those data who are disclosed in a different way so far. And those data will be added to our template. And then at the next stage, we will try to map these data and the structure, which is again totally different, to the HTT structure. And this will take time, and this is not an easy exercise. And of course, even though we support this approach, we can already say that most likely German Pfandbrief banks won't disclose every single figure which is part of the HTT for several reasons. One simple reason is there are some data which do not apply to the German market. For instance, the indexed LTV, it simply doesn't exist in Germany. So why we will try to do everything to get this HTT in Germany implemented, we probably won't disclose every single figure. But I guess this will apply to all other national countries or many other national countries as well. Still, the huge advantage is there that you have these figures, that you have comparable figures, and especially as an analyst, you can use the same template, the same structure for each and single covered bond.
Thank you. I mean, Ralf, you work with issuers on a daily basis. We can hear from Sascha that implementation will take time. We have 1 year of phasing. Is that not long enough? I mean, how quickly can the HTT be implemented, and what cost and benefits do you see for issuers, or is it more like a cost on top of what they publish already today?
Yeah, I mean, there were a lot of questions, and I mean, just to maybe add on what Sascha said, I mean, in the process of the discussion between the issuers and the ECBC to get basically this template, to agree on that template, I think from the 14 countries that currently are labeled, 8 actually gave some feedback, so discussed, which shows that the others seem to be quite comfortable with the approach. And the questions that came up, I think, were all very constructive. And I mean, of course, one of the main points was indeed to address, I mean, what do I do if I don't have the data, if I can't provide it, if it doesn't fit, if I just put NA, obviously it's not enough. And you mentioned that there are several categories now to explain this, which I think comforted a lot of issuers and was indeed the right approach here. So, of course, I mean, with regards to the benefits and the cost, we're not starting from scratch, right? I mean, that's good. So we have the national templates, and also, I mean, what we just heard in Germany, how to integrate, I mean, the HTT into the NTT and how to basically get this going is, of course, I think probably the most difficult one, because you have a legal requirement, so you have to go through the lawmaker and change things, which is not the case in other countries. So, which gives more flexibility and make things maybe a bit easier, but still, I mean, the NTTs are out there. In some cases, you have even investor reports on the websites, plus the ECBC template. So now you may have a third one. So maybe there is room, I mean, somehow to get this in one file and maybe add some more tabs into the Excel file, if that's possible. So here is a bit of work to be done. I think it's not impossible. I think a year is fine, because we're not starting from scratch. And I mean, the idea would also be to conserve basically the information that was given in the NTT, but which is not required in the HTT. Yeah? So, which then make the analytical process maybe a bit more complicated if investors want to, have suddenly a very big Excel file. But I think that goes into the direction of what François said. I mean, to keep the dialogue going and to provide investor with the information that is available and is can be given to investors. Well, the costs, obviously, or the benefits. Of course, costs are there, right? IT. Everybody knows this is a nightmare. And that's why it took so long to get all the transparency templates out. But issuers are moving into the direction, and they've done the work. In the short term, the benefits are probably very low, because currently for pricing, the parameters for covered bond pricing are other parameters. Is not basically transparency or the fundamentals. But we've been discussing about the exit of the ECB at one point from their quantitative easing. So when then we return to more fundamental pricing approach, I'm sure that the features of transparency and the data that is provided by issuers will play a more important role.
In the interest of time, we're running out of time. So the HTT seems to be a good starting point with further development, potentially as the product evolves and as regulation evolves. But it seems that on the data side, we have a big tick for the time being. To the whole of you, and maybe if we can start from Ad, is there any remaining hot potato key issues that we need to address in terms of transparency urgently?
Urgently not, but like I said, their continuous thinking is ongoing, so I don't exclude that out of that there will come further ideas, but I cannot say yes yet, but or even say at all, but not urgent ones.
Well, I would say I would encourage probably something I haven't said before. I would encourage to work a lot on the glossary, on the harmonized glossary, which in the current situation where definitions, variables, methodologies, approaches are unfortunately different, is the only way out to provide clarity. So I would encourage to beef up your glossary. And there is a current discussion on exposures to institutions, substitution assets. So more breakdown in that dimension will bring clarity also among regulators.
Well, the glossary is very important. We already start working on it, and I can tell you it's very difficult to come up with a common understanding, even in one national country. And again, we should keep in mind transparency is always a moving target. We have some experience in that. We've amended the legal requirement in Germany almost on a yearly basis. All of a sudden, investors are interested in some information which are not disclosed yet, which were not interesting for them at all in the past. So we have to keep in mind it's a continuous work to do in this area.
I think there's clearly a link between the transparency template and this initiative and the further harmonization of covered bond frameworks that is somehow in the making, or at least it's been discussed, or it's going to be discussed further on. And I guess that this template will play a role here, in particular when we think about the glossary, because then we see basically clearly the differences. And at that point, I think there will be some discussion about how this can be harmonized. But that has nothing to do with the transparency, of course. But convergence will, in that direction, then go on.
Well, very few things to add to what has been said already. I fully agree with what Massimiliano said previously. I think, markets, these covered markets will keep on changing. We all have to adjust to that as issuers, as investors, as regulators, as central banks. The template is a tool, a very useful one because it's flexible. So it has to, again, as I said previously, it's a starting point. It's definitely not the end of the game. And the challenge will be to keep this ball rolling.
fully agree what's being said, nothing to add.
Well, nothing to add on residential loans. Maybe for the public loans, we would wish some improvements. Yeah, obviously.
Okay. Well, so thank you very much to my panelists, and I would like to give them a big applause.